Catching 2x to reward from a scalp and using indicators isn't real scalping. It's gambling with a timer. If that's your approach, you're just guessing with the good lighting. You enter too late, exit too early, and keep getting wigged out. Every scalp feels like a lock, not a skill. You stare at a chart for hours, and the market still humiliates you with the fake breakout and a stop hunt. You know the feeling. Instant regret after entries and confusion every time price reverse. But what if every scalp had a structure? What if you know exactly where liquidity sits and how to enter before the trap set? Imagine hitting 1 to 3 risk to reward scalp trades consistently, not by chance, but by precision. This is how pros scalp, not with the indicators, but with intention. In this video, I will teach you the exact scalping strategy based on liquidity concept. You will learn a rule-based system that's give you higher risk to reward edge, clean execution, and full confidence in your entries. I will break it all down on the chart. So let's get started. Today's video is sponsored by Prop365. The platform that gives you a real buying power without risking your money. Here is the deal. Prop365 lets you trade with up to $100,000 of company capital and you keep 80% of the profits. No stress, no upfront investment. You prove your skills, they provide the funding. And if you're new, they got you. Prop365 offer a free lessons inside their academy showing you everything step by step. No fluff, just what works. Trade Forex, crypto, indices, and metals. Whatever your edge, apply this matters. With a strong and serious capital behind you. Getting started is easy. First, register on Prop365. Then pick a challenge and use the discount code in the description, which is going to give you a 30% discount. It's bring it just down to $39. Then pass the challenge and get funded and start earning. And yes, your fee is going to get refunded once you pass the challenge. And don't worry, if you are a beginner, they have launched a new 2-step max challenge built to accessible. Combine that with their academy training and they are fully equipped. Your strategy deserves more capital. Stop risking your own money and start earning like professionals. Click the link in bio and use the promo code that's going to give you 30% discount and start level up your trading journey with Prop365. Now, let's get started. So let's just start. The first thing we should learn is the range and the fundamental of the range. What is the range? How we can identify the range and what the liquidity inside the range. So our scalp, all the trading that you're gonna learn in this video, gonna be inside of the range. Now, why the range is so important in the technical analysis or the approach that you're gonna go with it? Because let's say trading is a chess game, right? And those chess moves that we're gonna do is a scalp. So we want to win this, right? And the pieces inside the chess, it's like a king, queen. These are liquidity, right? And the chessboard itself, it's range. So we can't play the chess without chessboard, right? Maybe we can replace the pieces with some icon like stone, like pen, but we can't play without the chessboard. So chessboard is so important, right? So same thing, the range is so important. We're just gonna look for trade and a scalp inside the range because we have a clear liquidity inside the range. And the only thing we're going to aim for is going to be scalp inside the range. So the fifth thing we should learn about the range is QM formation. So what is the QM formation or Quasimodo, right? It's once we get the stop hunt, a liquidity swap, and after we get the break of market structure, this is gonna be our QM formation, which we call this a bullish QM. So first we should see the stop hunt or liquidity swap, and right after it we should get the break of market structure. This is gonna be a bullish QM. Now the opposite, the liquidity swap to the upside, price taken on the buy side here, then right after it create a break of market structure, this is gonna be a bearish QM. So the QM stands for Quasimodo, right? And if you see QM in any point of interest, right, that's a great sign, which that's mean price really show you some interest to give a reaction from that area. This is the one tip that you can put it in your mind. And also that 3 candle confirmation like this, see 1, 2, 3, the second candle, if it's have a higher wick or opposite, if you see this in a higher time frame, in a low time frame, you're gonna see a QM. So that's so important. So these are a small tip that's going to help you a lot. So now once we learn a QM, so this is the bullish QM and this is the bearish QM, bullish Quasimodo and the bearish Quasimodo. So we get the stop on a break of market structure and a stop on a break of market structure here, right? Now let's see what is the range. Okay, so we have bullish range and a bearish range. So what is the bullish range? So once we get a bullish Quasimodo and we get the opposite, which we're going to be a bearish Quasimodo here, you're going to see two-side QM here, a stop on and break of market structure and a stop on and break of market structure. This formation for us going to be a bullish range. So the bullish range always start with a bullish Quasimodo and close pretty much with a bearish Quasimodo. And in the bearish range is opposite. Okay, start with a bearish Quasimodo and close with a bullish Quasimodo. So this is the bullish range formation and this is the bearish range formation. Exactly. We're going to look for trade inside of this range. This is the chessboard that we're going to play inside it, right? We're going to start to catch a scalp inside of this. Now I'm going to talk about the, let's say, the strong low and strong high in a minute, but this is the range. This is this is the range formation. This is the bullish range and this is the bearish range. Now, in the bullish range, what we are expecting in the bullish range, it's this low. We call this bullish QM as a strong low, and the bearish Quasimodo or the QM that we have on upside, we call this a weak high in a bullish range. So in the bullish range, we call this low strong low, and we call this high weak high. And in the bearish range, it's opposite. We call this bearish QM the start strong high, and the low, a bullish QM here, we call it weak low. So yes, from the name, it's obvious. From the strong low, we are expecting to price respect this strong low, and from the weak high, we are expecting to price take out the weak high. Same in the bearish range, we're expecting to price pretty much respect this strong high and come back and take out the weak low. And for sure, if you pause the video and if you open the chart, you're going to see a lot of formation in a different time frame of these ranges, but a lot of them, they are not respected, right? I completely understand, because a lot of you guys are so smart. You just pause the video, you go to the chart, or maybe you have a previous experience. Now you're gonna think, okay, but if you're expecting respect from the strong low or strong high, which a lot of the range in the market, they are not respected. Now I'm gonna explain this for you guys. Now, pay attention. Here's the thing. We have valid range and invalid range, which I'm going to talk about this, how you can find the valid ranges. So everything in this system that you're going to learn is mechanical, and the only thing that you need first understand the concept, then we're going to go with the rule-based system. So this is the bullish range and this is the bearish range. Now let's talk about the liquidity inside the range. Now guys, we have two types of the liquidity inside the range. Okay, inside the range that we have one liquidity that we call this internal range liquidity, and another liquidity that we have is the external range liquidity. Internal means the liquidity inside the range, which I'm going to talk about this, and the external is the liquidity outside the range, which I'm going to also talk about that. Now, for the internal, the liquidity inside the range, we have two types of the liquidity of the internal. We have two types of the internal type 1, internal type 2. Now in this video, I'm going to teach you guys the type 1. I'm not going to talk about the type 2, but if you're interested, once you finish the video, if you're interested to learn more about the type 2, just let me know in the DM, in the comments, just let me know so I can create the next video as the type 2 of the internal. Now, let's just start. What is the internal range liquidity? Okay. Now, first, let's just start with the external range liquidity, right? So the external liquidity, what I mean from the liquidity outside of the range. So as I told you, in the bullish range, we are expecting to price respect the strong low and take out the weak high. And the bearish range, we are expecting to price respect the strong high and take out the weak low. So this weak high and weak low going to be our external range liquidity. This is going to be the external. We call this external range liquidity. This is the last target, the last liquidity point we expected in the range get taken up, right? So the weak high and the weak low going to be our external range liquidity. So it was easy, right? I'm going to show you guys an example at the end of the video. I'm going to go with the scalp true. I'm going to do the approach so you can see more example over there. Now let's go with the internal range liquidity. So now let's talk about the internal range liquidity type 1. As I told you, for type 2, let me know in the comment. I'm going to create a video for it. Now let's say this is the bullish range. Now the liquidity inside of the range, one one of the type of the liquidity inside the range, you're going to see between the strong low that you have and a weak high that you have, there is a retracement and a break of market structure or a swing low here. Okay, so for sure it's not one, can be 10, can be 4, can be 2, can be 3. Okay, but if you see a retracement and a break of market structure here between the strong low and the weak high that you have, or a swing low that price created between them, right, this is the liquidity. So I don't know, you know or not, above every swing high and swing low we have a liquidity. If you want to learn more about the liquidity, check the video here that I'm going to put it for you guys, that I explained a lot of things about the liquidity, which you can learn it. As I told you, if we get a retracement and break of market structure or swing low inside the bullish range between the strong low and a weak high, this is going to be the internal range liquidity for us. Okay, and opposite in the bearish range, if we get the retracement and a break of market structure here between the strong high or weak low, or we get a swing highs here between the strong high or weak low, these are going to be the internal range liquidity range. Now, the internal range liquidity, that means the liquidities inside the range, which we are expecting to the price take all of those liquidity out. Now, here's the thing. Sometimes you're going to see in the range that we have a lot of internal range liquidity, maybe 4, maybe 5. Okay, and some of them can be retracement break of market structure. Some of them can be just a swing low or swing high. Now, are we expecting to all of them get taken out? The answer is no. There are another formula, another mechanical approach that you can find the safest, at least the minimum level that we can expect to get taken out, because we don't know. The market is not 100%, guys. We don't know what market maker plan to do. We don't know how much volume the market maker gonna put for this price. The price come down and take out this, right? We don't know that, right? Even if you work with the volume strategy, if you work with the, I don't know, footprint and after the strategy, we don't know how much volume that's gonna decide by market maker to price to put it and take out the liquidity. So that reason there is some formula. If you're interested, I can create a video in the type 2 also, which we can identify at least which one of these is going to get taken out. So in a simple language, if we have a lot of internal liquidity, we are not expecting all of them get taken out because we don't know how much of them going to get taken out. But there is a rule that if you're interested, I can make a video for you guys. So now we learned about the internal liquidity, right? So at the end, okay, so the whole thing about the range, which we call this a range cycle, we are expecting to price take out the internal, then go for external. So the internal and external is like a buy side and the sell side. So price going to take out the buy side, then price going to go to the sell side. So it's the same thing, right? Price going to take out the internal, then price going to go to the external. But there is a cycle here. Price going to take out the internal, the price going to take out the external, right? Now we're going to look for trade inside this, inside the chessboard. Now we know where the pieces are. Now we want to make the move, which I'm going to teach you guys how. So now let's talk about the minor range and the major range. So what is the major range? So guys, let's say this is a daily time frame. Okay, so let's say this is a daily time frame and we have let's say, let me just fix this, we have a 1 hour time frame here. Okay, so now hear me out. First of all, the POI is so important inside the range because the POI, let's say if this is the range, the POI is the main piece that we have here that we can expect to price tap to it and give the reaction on it. The liquidity going to show us where's the liquidity are, and the POI is the area that we can expect the reaction to the external from it. So the POI is so important. Again, if you don't know thing about, and if you don't have any information about the POI, check the video here. I have a full course, free course that I talk about the POI there. Before we dive into the major range and minor range, let me just give you a quick tip here how you can find the valid range of the day, right? So it doesn't matter, even if you work, so a lot of you guys working with a different approach and different strategy. I'm just here to give you a concept, right? So the best thing that you can do to find a valid range of the day is look for the higher time frame POI. So I personally, what I'm doing, I'm looking for the nearest unmitigated key level or POI above and below my open area, right? It's depending on the situation. But let's say if you have an order block here and you expect to price tap to that order block and give you the major move in the daily time frame. So you're going to drop down to a low time frame and you're going to look for the strong low that is matched with your POI. So in this case, take a look in the 1 hour time frame. If this is the high time frame POI of the daily, right, you have a strong low here that is matched with that. So here you get the strong low and here you get the weak high. This is the ready formation that you can find the range inside the market using a daily time frame or daily approach or market structure or daily buys, anything that you can call it, right? So this is one of the good approach that you can do. So find a high time frame in the POI and come down to the low time frame and look for the strong low or a range that is matched with the high time frame POI. For sure, you can go to a lower time frame like 15-minute, 5-minute, but you're gonna see a lot of liquidities here. So this formula is going to give you a great approach to find the major range. Now let's talk about the major range and a minor range. So what is the major range, guys? Let's see in the 1 hour time frame you have a range, right? So you have a strong low, you have a weak high, you have an internal range liquidity, now we have a POI. Now one question that you guys can ask is, Ebol, is the strong low and the weak high should be in the same time frame? Yes, should be in the same time frame. Now, is the internal liquidity could be in the same time frame? Yes. The strong low, weak high, internal, external should be in the same time frame. You can't take the internal from 5-minute and take your range from 1 hour time frame. It's not possible. So let's say in the 1 hour time frame you have the range like this. Now, what is the let's say minor range? Now, guys, take a look here. So we are expecting to price take out the internal, then go to the external, right? So these moves in a low time frame, let's say in a 5-minute time frame, okay, you're gonna see a lot of bearish range in this bearish move or bearish retracement or expansion, anything that you want to call it. It's okay. So in this bearish retracement, you're gonna see in the low time frame, you're gonna see a lot of bearish move. Here's the fractal come to play. Market is fractal. So in this time frame, in a 1 hour retracement, you're going to see a lot of bearish range until this internal liquidity that get created, which we call them. So for this bearish range until the internal, we call them counter trend minor range. Okay, so you're going to see a lot of counter trend minor range here. Why counter trend? Because range is bullish. We are expecting to price take out the external range liquidity. So that reason this is a retracement. It's not an expansion move here. And from the POI until the external, you're going to see a lot of bullish range that created in the lower time frame, like 5-minute, 1-minute time frame. It's about any time frame that you can go with, right? So we call this small ranges inside this major range. We call this minor range. Now for the ranges, the minor ranges that they are on the same line of the external, we call them Protrend, and the opposite we call them counter trend. Okay, so now what are we going to do? We are going to talk about two type of setup for the scalp. Now I'm going to teach you guys how you can start to scalp in the diagram and the theory in the lesson. Then we're going to go to the real example. So now what we're going to talk about is two type of the setup, the scalp setup that you can start and scalp inside the range. I'm going to teach you guys two different setup, and I'm going to talk about the win rate and the risk rewards. And after that, we're going to go right to the trade breakdown, and I'm going to show you guys how this mechanical system work inside the real chart. Now guys, we have two types of the setup for a scalp. As I told you, we have one counter trend and one pro trend. The counter trend is the let's say in the bullish range, we're going to get the retracement until the internal, then we're going to go for the external, right? This is the range cycle. So that retracement move for us is going to be a counter trend if you catch any setup until the internal. Then the move from the POI to the external, that's going to be a pro trend for us, right? Which we have two types of setup, counter trend and pro trend. Now I'm going to talk about the win rate. I'm going to show you guys all of the stuff. Let's just start with the counter trend. So the counter trend, okay, let's say this is the 1 hour time frame. In a 1 hour time frame, we have a high time frame POI, we have a strong low, we have a, let's say, a weak high, we have the internal liquidity, right? So this is the bullish range, right? This is the bullish range that we have in a 1 hour time frame. Now, if you remember, I told you the range cycle, what are we expecting in the range cycle? To first price take out the internal, then tap to the POI, then go to take out the external liquidity, right? So first internal, then external liquidity, right? So now this is going to be a counter trend, this is going to be a pro trend. Now, how are we going to start and scalp the counter trend? Is so easy. What you're going to do, this is the 1 hour time frame. This is so important. first, you're going to make sure you have the weak high in a bullish trend. And then the bearish trend, you're going to make sure to have the weak low, right? So you can take the weak high as a Q information, or you can take it as a swing high or swing low. This is just for the weak high. For the strong low, strong high, you should get it as a Q information. Okay, now once you get the weak high formation, stop and break of market structure, you are going to look for the internal. So identify your internal. This is your internal range liquidity. You're expecting to price take out this liquidity inside the range, right? Now, between this area, okay, which I'm call this counter trend area, you're gonna look for all the obstacles. So what is the obstacle? So if you're in the bullish market structure, the bullish POI is going to be a POI for us, point of interest of the pro bullish POI, let's say something like this, pro trend bullish POI, and the counter trend or bearish POI in this cases, right? So let's say right now we are expecting to price be bearish, right? So because we are expecting to price take out the internal. So all the bullish POIs here for us going to be an obstacle, right? Going to be an obstacle, and the bearish POIs here are going to get respected. Not all of them, some of them. As I told you, go and watch that video, right? So these are going to be obstacle. These are going to be a pro POI. Now here, once price tap to this, it's going to be opposite. The bearish POI is going to be obstacles, right? And the bullish one going to be pro POI. So what you're going to do, you're going to mark all the POI that you can see. I don't know, order block, unmitigated wick, I don't know, hidden base, support and resistance, all things that you can expect, fair value gap, anything that you can see that you can expect a reaction on them. Now, in which time frame? In the same time frame that you identify the range. The weak, high, strong, low, internal, external, and the obstacles here should be on the same time frame. All of them should be on the same time frame. So now let's say we drop down a low time frame, okay? In this case, let's say these are my 1 hour time frame obstacle. So now for sure, you're going to see some obstacle that they are not respected. Okay, now I'm going to talk about the respect of the obstacle. So what we are expecting from obstacle, a fake move, a lot of in obstacles, we can expect pretty much the obstacles is the area that the retail traders, the liquidity traders, the traders are going to get the liquidity they're looking for buy over there. So, and a lot of time price react, create a fake move inside this obstacle. So what we can see here is price after this break of market structure in 1 hour time frame, we're gonna wait to price tap to this obstacle. Once price tap to this obstacle, okay, you're gonna wait for tree candle confirmation, or you're gonna wait for a Q information here. Mostly tree candle confirmation here works. Okay, you're gonna wait for tree candle confirmation and obstacle. Once you get the tree candle confirmation and obstacle, you're gonna look. Now this is gonna be your weak low. This is gonna be your strong high. You automatically have your range. Okay, now you're gonna look for the liquidity. If you have a liquidity, okay, we have an internal liquidity here, you're gonna mark your liquidity and you're gonna look for the nearest high time frame POI. So if this is a 5-minute time frame, go to the 15-minute time frame. Look for a POI. If you don't have any POI, just you can put the order here, or you can identify the 5-minute time frame POI. But it's better to take the nearest POI, high time frame POI, in above the liquidity. So let's say you have an order block here, you're gonna take it, right? Let's say you have an order block here, you're gonna take it. So now you're gonna enter here like this, the short position, gonna enter here, and you take out the internal. What is your next target? Is external to get taken out. So you can aim for external liquidity, or you can aim more, and you can aim the higher time frame liquidity point target, which is going to be this internal, which I don't recommend to do this. If you want to go as a swing trade, the swing targets, you can do this. But if you want a high win rate scalp strategy, just exit at external liquidity, because we don't know what's going to be happening in the market. And at least if you are going to aim for this internal liquidity, 100% go break even after this external liquidity get taken out. Please, that's so important. But if you want a high win rate, target the external, exit that external, enjoy it. But if you want, let's say, I'm not going to say a low win rate, but a win rate that you have an edge that you have a lot of break even on them, just go with the targeting like, internal liquidity or swing targeting. And after you hit TP, again, what are you going to do? You're going to wait for obstacles. Some obstacles, they are not going to get respected. It's okay. The sign here for us is once we see the tree candle confirmation inside the obstacle, that's mean price, it's like to react from it, right? So you get the tree candle confirmation. Okay, what are you going to wait for? Once you get a tree candle confirmation, this is your weak low and this is your strong high, stop on a break of market structure. You have an internal. Now, what are you going to do? You're going to go to a 15-minute time frame. In this case, let's say you're going to look for, let's say, a nearest POI above this. Let's say if you have an order block, if you have fair value gap, Doesn't matter. Let's say if you have a fair value gap. And what are you going to do? You are going to look for sell here. Put the stop loss above the strong high. Please put the stop loss above the strong high if you want a safer stop loss, and target the external liquidity of this. Then you can catch a beautiful high win rate to restore reward scalp in the low time frames. Okay. Again, what are you gonna do? Price tap to the obstacle. You're gonna wait for tree candle confirmation. If you get it, once you get a tree candle confirmation, it's gonna be a weak low, and this is going to be your strong high. If you didn't get tree candle confirmation, or if you get a tree candle confirmation, let's say if you here get a tree candle confirmation, that price come back here and create a tree candle confirmation here, this is going to be your liquidity. Okay. So in a case that you get a tree candle confirmation, but you do this in any respect, and price come down, that's going to be 90% of the chance that area going to be a liquidity. What are you going to do once we get a strong high and a weak low? We have internal. You're going to identify the internal. They're going to go to higher time frame, look for the POI. Maybe let's say if you have a support and resistance area here, let's say these are just example that you can look for sell, stop loss above the strong high. So this is the end range. Once you are so near in the internal liquidity, you can mark the internal liquidity as your target. So this is the thing that you should go and practice and see which one works for you. I'm just giving you a concept. I'm just giving you the car, right? I'm giving you the car. I'm giving you the key, and I say, bro, just go and modify the car from the personality or the car personality that you have, right? I'm giving you a stock Mercedes, and if you want to do a drag with it, go change the, let's say, I don't know, go tune it, go change the tires and put a drag tire on it. I'm giving you the Mercedes. If you want to drift with it, go and change the wheels, do anything that you want, just make it as a drift one. Change the body kit, change the, I don't know, anything that you want. So I'm giving you the stock car. Now you should modify it. So that's so important. Now, this is going to be how you're going to look for a counter trend. Okay. And once the internal liquidity of the major range get taken up, guys, you are not allowed to look for sell anymore. Even if price want to come back here, didn't tap to the POI, okay, you are not allowed to look for sell because it's so risky. It's so risky. It's a 50-50 chance, like a gambling, right? So once the internal liquidity of the major range taken out, you are done for the counter trend. Now you're going to wait for pro trend setup, which I'm going to talk about this. So this was a counter trend. Now I'm going to talk about the pro trend, how we're going to look for the pro trend setup. And yep, let's get into it. Now let's start with the pro trend. So the pro trend start once we take out the internal range liquidity and once price tap to the POI. So once price tap to the POI, what are you going to do? It's the same as let's say the counter trend. Now, what are you going to do? First, once price take out the internal liquidity, let's say this is the 1 hour time frame, okay? First, before you go to the 15-minute, you're going to draw all obstacles that you see here. All obstacles, same as a counter trend in the same time frame. Now, what are you going to do? Here is so important. Now, let's say these are the obstacle. Let's say, I'm just going to give you guys some example here. Let's say these are the obstacle. So now, what are you going to do? First, okay, the first range, the minor range you're going to see in the 5, 3, or 1 minute time frame. This is not a scalp setup. This is a beautiful setup that you can catch, which I'm catching. I'm going to talk about this. This is the only setup I train in the market. So once price tap to the PUI, and if I see a stop on break of market structure and a liquidity, and let's say tree candle confirmation or Q formation, and I'm gonna look for PUI below the internal. I'm gonna look for buy here. Let's say I'm gonna look for buy here from here to this point. I'm gonna look for buy, stop loss below the strong low. I'm gonna look for this beautiful buy. I'm targeting 4 restore reward. That's mean I'm just exiting at the 4 restore reward. But this is the A+ setup. This is the beautiful setup. It's have a huge win rate if you go with the right POI, and if you catch a beautiful confirmation trade. This is a beautiful setup. So you can also trade this, or you can wait after this. Once you get this range, the confirmation entry, we call this. Once you get the confirmation entry range get taken out, okay. Now that confirmation entry can be your confirmation for a scalp. Now, what you can do, and after that after this range, you can look for a scalp, or you can start on, it's depend on you. You can start to scalp from this range. So what you're going to do, you're going to, again, wait for price tap to the obstacle, tree candle confirmation or Q formation, okay? Then you're going to enter in the nearest POI below the internal or liquidity that you have here. Just put this with the blue. Again, what are you going to see? So here price didn't create a tree candle confirmation, but again, didn't respect it. Tap to the obstacle, create a tree candle confirmation. This is going to be a liquidity. For now, we can take this as Q formation. So price come down here. Sometime your trade going to get missed. That's completely normal. If you don't have any liquidity, if you choose the nearest POI, your trade can be missed like this. It's okay. But let's say you can enter here also, and a stop on a break of market structure. Price gonna tap to the obstacle here. You know, you can take this streak and the confirmation and take this as internal liquidity. Depend on you. You should test it out, see which one makes sense for you. And for example, take the nearest PO as a support and resistance. And what you can do, you can look for the buy. Okay, for the first position, I recommend to just target the external liquidity if you want to take a risk, or you can wait for this one to get confirmed. The external liquidity of the first range get taken out of the minor range, so give you more confirmation to enter. Then you can enter here, so you can look for this, or you can go with the external. You can go with the external is okay, but again, the chance of the break even gonna go too high. If you want a proper scalp, you should understand you're scalping. You're entering in a low time frame entry, and you want to exit at the right time and fast as possible. So don't look for 10 story bar. All of this bullshit that you're gonna see on Instagram or in the trading or the Twitter or on the X, anything that you call it, okay, it's bullshit. Okay, if they say I'll catch in a 1 million risk to reward, 100 risk to reward, this is fucking bullshit, because the spread, it's not possible. And I was trying to make my strategy based on this, but it's gonna, even if that's possible, gonna give you a lot of psychology pressure, because you're gonna have a lot of break even. You should go with the low risk. Okay, you should go with the low risk, like 0.25%. You should take out the profit. This doesn't gonna make sense. And you can look for the scalp until the external liquidity. Now, this is the Protrend. The Protrend happened once price tapped to the PU high, okay? And this is the counter trend. Now, let's go to a chart breakdown. So let's dive into a backtest. I'm going to show you guys how you're going to apply this mechanical system. It's going to be so easy, but you should be paying attention a lot to the small details. So let's say in this case, we have a high time frame PUI, okay? And we drop down to a low time frame. We have a stop on break of market structure. We have a strong high. Let's say our market structure is bearish. And for the week low, as I told you, for the week low and the week high, what you can do, you can take a trick on the confirmation and obstacle. For example, price tap to a high time frame obstacle at this area, or you can take a Q1 formation. In this case, I take a trick on the confirmation. For a strong high, that should be a Q1 formation. And we have a one internal here and one internal here. And yes, we also have one internal here. Okay. So now what you're going to do first is you are going to draw all the obstacles that you see here. So in this case, what I can see order block here. It's my obstacle. I have one obstacle here, one order block here as obstacle, also matched with the fair value gap. We have a fair value gap here, pretty much, you can say, which is going to be covered with this area. We have an unmitigated wick here also. Again, matched with the fair value gap here. Yeah, we have these three areas I can see, and also we have a support and resistance area here, which this is also matched with this area. It's gonna make sense. But yeah, once you identify all the obstacles, now what you are going to do, let me just give them a mark for obstacles. So in a case that we can have them. So we have one obstacle here, and one obstacle here. So what are you going to do? You're going to drop down to a low time frame. And what are you going to do? You're going to wait to obstacle get mitigated. So here we're going to wait and wait. Let me just play this. So now price here tapped to my obstacle, right? What are we going to look for? First trick on the confirmation. Do I have a trick on the confirmation here? Yes, I have a trick on the confirmation. If you have a trick on the confirmation, well, this is a sign that price want to react from this area. Okay, so let's do this with the purple, right? So once you have a trick in the confirmation, you're going to look for the internal liquidity, or straight you can take it as strong low. So we have a strong low here. Okay, we have a break of market structure. And how many internal I can see? 1, 2, yeah, just two swing low I can see here, right? And I'm going to go to higher time frame to identify my higher time frame POI. In the 30-minute time frame, what I can see, I have a gap here, I have an order block here. So this kind of makes sense for me, right? So I have an order block here. I'm gonna get back to the 5-minute time frame. Now I'm gonna wait to price take this out. So price take the liquidity out. Let's see. So price didn't tap to edit, as I told you. Now here, let's take a look. The obstacle didn't get failed, but we get a Q1 formation and a self trick and the confirmation, which this is so much powerful. And this was just a liquidity, a new internal liquidity creation. You should pay attention about this. Now, this area for us is going to be a liquidity. Now, if I want to check the POI, yes, completely makes sense. We have the nearest as an order block. Also, we have a balance fill or the fair value gap. It's the same name. same thing. So what are we going to do? Now we're going to drop down to 5-minute time frame, and we're going to wait to price take out the internal. So you're going to wait. The wait patient is so important. Price take out the internal. You're going to wait. Don't fall for this move. Price tap to here, so we can go for a long here, and a stop loss. And by the way, this is the strong low. Stop loss below the strong low here, and this is going to be your target. This is going to be your first target, right? You can go with the next swing target as this one or this one, but the break-even chance is so high. Okay, so I'm just going to try to show you the both. Okay, so price tap to it, respecting a strong low, take out the external liquidity. This is the first position that we got here. Nice. So we're going to go with the second one. So price tap to the obstacle. We're going to wait for 3 candle confirmation. Oh, I just moved a little bit a lot, but it's okay. We have a 3 candle confirmation here. Then again, do we have a strong low here? I think yes, we have a strong low. So if you take a look, strong low, stop on break of market structure. We have a stop on break of market structure here. And this is the strong low that we have. And this is the weak high. And for sure, this is the internal range liquidity, right? And for sure, you can also take, and instead of strong high, we can take, I'm sorry, the Q1 the 3 candle formation, we can take this Q1 formation here, and this is the internal range liquidity for us. So now what we can do, we can go to a high time frame. I'll look for the nearest POI. Again, what we have here, we have the order block. Yeah, kind of we have an order block. What about the 1 hour time frame? I want to see yeah, we have a huge order block here, so which we can refine it in the low time frame. So if you watch the POI videos, I told you, so we can take the open area here, which kind of makes sense. So now what are we going to do? For sure, you can refine this. This is just example to show you how you guys going to play with this. So we'll get back to the 5-minute time frame. Now we're going to wait and wait. So price take out the internal. We're going to wait. So we're going to go once price tap to here. Can go long here. For sure, if you refine your, for example, a POI to, let's say, to this order block, it's gonna make sense, right? Or pretty much the 15-minute order block, you can do it, but it's all depend on the edge that you have, right? And the type of the trader that you are. So we can put the stop loss here below this, below the strong low, and this is the take profit for us, the external liquidity, or you can go swing trade. Okay, so here, take a look. If you go to the swing trade here, now you're going to go break even here. So it's better to exit at the external liquidity of the range fast as possible. This is going to help you a lot. My position's gone. Okay, there we go, we get it back. So now price tap, then get back to the 5-minute time frame. We're going to wait, see price respected. Gonna wait and wait and wait. Now see price here is price love to playing, right? So here you can go to break even at the 2-minute break of market structure. I'm gonna give you a guys option. So you can go break even, you can wait for the external liquidity to take it out, or if you want to play safe after 2-minute break of market structure or major break of market structure, in this case, for example, 1 and 2 here, you can go to the break even, or you can just wait or hold it. So if you hold, if you go break even, so if you go break even after 2-minute break of market structure, you're going to go break even here. If you hold it, let's see. Yeah, if you hold it, you're going to get the TP done here, the external liquidity here. Let me draw the external liquidity of this area here also. So now again, we're gonna wait and wait and wait. So if the external liquidity of the range that you're looking for trade, the minor range, is near to the major range internal, you can go also with the internal. This is the one trick that I also recommend to my student to do this. So I'm gonna put this here. I'm gonna put this here. So now we are in the new obstacle. Again, we have one more internal liquidity up there. So we're gonna wait. So we get a tweak in the confirmation. So that's cool. If you get a trick on the confirmation, that's cool. This is the strong, this is the pretty much strong. Also, we have a Q information here. Stop hunt and a break of market structure. And do we have a strong low? We have this is stop hunt and this break of market structure, right? And this is the internal range liquidity, right? So pretty much we get the strong low and a weak high. Okay. Now I'm gonna go to a high time frame to look for the nearest POI below this. In the 15-minute, I can see this order block here. It's already refinanced near to the internal. That's cool. That makes sense. No need for refinement. So now we're gonna wait. We're gonna wait here. So price take up the internal range liquidity. Let me just put the internal range liquidity sign here. And yeah, here we're gonna go with the long here. Let's say stop loss below the strong low. Let's say in this case, if you put it here, you're gonna go stop loss. Let's say, for example, we put it here. I'm not caring about the edge or risk reward. I'm trying to just show you guys how you're gonna go with this. Okay, so here let's say stop loss. You take stop loss. So if I want to talk about that reality side, if you risk 0 point, you shouldn't risk 1% in these trade because these are the C or B setup in my strategy. Okay, I'm not looking for this trade. Maybe if you're looking for trade here, I'm waiting to price tap to a high time frame POI. I'm looking for in the low time frame. I'm looking for a beautiful confirmation tree until the forest reward or until the external liquidity. So, but if you are just want to go with the scalps, you just risk 0.5%. So here, if you was risk 0.5%, you're going to make 1% here, 1.5% here. And if you lost here, so you're going to make minus 0.5%. So in the total, you're up 2% here. So you're good. So risk low until you be professional on the trading. I mean, and then the scalping style. So now what we're going to do, we're going to wait. We're going to wait to price tap to the obstacle again. Now, E-ball, can I do the same scalp setup here? For example, in this range, can I do the same because the market's fractal? Can I do the same thing here? Yes, you can, but it's going to make you confused because you're going to go to the 1 minute time frame. Once you master all of the, the fractal nature of the market, you can go and do the same thing here in this range, right? So we're going to see what's going to be happen. Just price go up. So this is by the way, this is a new day, right? Maybe you can do the scalp inside of this. It doesn't matter the time frame. Just I'm talking the concept is the same in all the time frames. So price tap to the obstacle here, giving the reaction. Yes, I mean, let's see if we're gonna count this as a mitigation here. So what are you gonna see here? It's easy again. Let's just get back here. By the way, I'm not trading Asia session. This is just example to show you the concept. Okay. So we get a trick on the confirmation, or even we can say we get the stop hunt. We can say we get the break of market structure. Let me see if we get a break of market structure or not. Yes. And we have the internal liquidity here. And also we have the strong low here. So we get the strong low here. And this is the right internal liquidity here. And we can go to the high time frame, like 15-minute time frame, to look for the nearest POI, which we have this beautiful order block here, the open area order block. And you can look for buy, stop loss below this. By the way, this is the range formation. Okay. And this is the external liquidity, right? So you can aim for this. As I told you, once you are near to the internal liquidity of the major range, you can hold it till there. And you can go break even at the external liquidity in this case. Just let's play this. Yeah, here we go. We get the external liquidity here. So, yeah. So here to take profit hit. So again, price take out the internal liquidity. Now price tap to the high time frame POI. So here, this was the scalp. This was the contra-trend scalp. I know maybe you guys kind of think, but this is not a scalp. It's a day trading because the two-day pass. This was just a concept, right? You can do the same thing here in this range. You can go to the 1 minute time frame and do the same thing, same steps here on this range. You can then go buy here, Protrend, but I'm trying to show you guys a full picture of this in a high time frame so you can understand it. I can go to the 1 minute, 30 second, I can go to the 50 second and start to explain this, but your mind gonna get confused. The first thing you're gonna do is master it in a high time frame, then go to a lower time frame if you want to do the super scalp. I'm not a scalper, by the way. I used to be a good scalper, but I just quit scalping. I'm just doing day trading right now because that's make more sense for me. Now, again, so here's the concept again, saying what you're gonna do. We're gonna wait for, again, you're gonna go draw the obstacle. You're gonna wait for, stop hunt, break of market structure. Okay, in this case, let's say we're gonna wait for stop hunt and break of market structure here, right? We have it. And in this case, we have it right here also, stop hunt and break of market structure. We have a T1 here, type 1. T1 is meant to stand for type 1. And you can enter here. This is a small range as a confirmation, which you can enter. Or you can drop down to a low time frame if you want. Here, this is the right entry of the POI, which you can do, and you can exit at this area, or you can just target it, or you can just target it till the major range external liquidity here, which I'm not doing this, by the way. I'm just exited the forest reward. I'm not telling you this is so possible. This is a huge win rate. You can do this. I'm just showing to you guys how you can play with this concept in the backtesting area for yourself and reach the same concept level. And for sure, you're going to draw, it's the same thing. You're going to draw obstacle here. You're going to wait for reaction. You're going to draw liquidity. So see, in this case, C price, this for sure in the 100% this area, we get the obstacle in the 1 hour on the 3 minute time frame. Price come back, take out the liquidity, you can enter here again, right? So again, here was the obstacle 100% for sure in a high time frame. QM, liquidity, enter here again, target this area, and that's it. Price take out this, or you just can focus on one trade. So that's it. This is how you're gonna scalp. I'm trying to show you guys how to do the concept, to put it all together, right? If you want to just go with this style or any style, okay, if you're learning a new concept or if you're learning a new thing, the edge is like a car that everyone has a specific car. So for example, I like a Mercedes. I'm driving a CLS Banan, right? The Russian knows what is the Banan means, CLS Banan. I'm driving a CLS. I'm driving a massive mafia car. I'm driving a V8 B-Turbo. I like a Mercedes. But some of you guys, maybe you like a Tesla, right? Some of you guys, maybe you like a fucking BMW, right? So it depends. Some of you guys maybe like a Lamborghini, Ferrari, right? So it's depend. The edge is like the car that you have, right? You do the car that you prefer. So once you have that car, you should sharp that it. You're gonna modify it. You're gonna custom that car along. Let's say it's going to be matched with your personality, right? So the edge is the same thing, right? I'm just teaching you guys how to, I'm going to give you the car that you want, right? The reason that you watch this video because you like the liquidity concept, and you know the liquidity concept is one of the powerful concepts in the trading industry, right? You click it, I'm just going to give you a car. Now you're going to go in. You should go to the backtest. You're going to find your mechanic and you're going to modify it. And the best mechanic that you're going to have, it's going to be yourself and the stop losses. Hope this video was great. Let me know in the comment how was the video, and let me know in comment what you want to me to talk about in the next video for you guys. And don't forget to subscribe. Now if you want to join my private mentorship community and trade with me every day and get funded with me every day in less than 2 months and learn all of the secret, all of the setup, the mechanical setup I have, just click the link on bio. And yep, that's it. See you all. Cheers.